Okay, good afternoon and welcome back to our Options Education webinar series. My name is Tony Zhang. I'm the Chief Strategist here at Options Play, and we are at the end of 2020. So we wanted to take some time to review all the topics that we covered here during the year of 2020, which we covered a very diverse group of options education. Wanted to make sure that you have access to everything that we provided throughout the year. Have an understanding as to, regardless of whether you're a beginner, intermediate, or advanced trader, to get a sense for how you can, number one, understand what we covered this year, how you can access those courses so that you can maybe take some time over the holidays, review the education. If you haven't taken a chance to look at it for the first time, take that education so that you can start 2021 in a much better position with a solid understanding of options trading. So as we do more education next year, you have that solid foundation that you can use to build on top of as we explore new educational sessions here next year. So with that, let's go ahead and get started. Now, before we do, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So we're going to cover everything in terms of our beginner master course that we hosted at the beginning of the year. We hosted 2 intermediate option courses this year, as well as an advanced master course. This is all designed to give you a better understanding of the fundamentals of options trading. For those of you that are absolute, first-time options traders, know how to get started, know where to start. For those of you that have a little bit more experience, making sure that you understand as far as the actual strategies to trade, what the strategies mean, understand them conceptually, but more importantly, understand the best practices for entering and exit those strategies. And for those of you that are experienced, those advanced option topics really give you a better understanding of volatility, option Greeks, and really around the position management side of things and the trading psychology side of things, which is really important for the success of options trading. So we covered a lot of different courses that covered the different various aspects of options trading, regardless of whether you're a beginner or advanced trader. And then what we really, started to add in this year, which I think is very different, but very, very helpful for investors, are our market outlook sessions. This is where we discuss the broader markets with strategists. We brought in Steve Sosnick, who is the chief strategist at Interactive Brokers. Brought in strategists such as Patrick Serezna and myself to give you a better understanding as to how a strategist like us views the market, how we typically take those views and leverage them using options to take a directional view, and really just give you a sense for the thought process that goes through our minds when we flesh out a thesis or an idea. And we also hosted 2 virtual options education days because of the fact of COVID-19 this year. We couldn't do our typical physical events. We did 2 virtual events. Those were great events, in my opinion, for those of you that were able to participate. And the great thing about the virtual events is that they're recorded. So you can actually go back and watch our April options education events, as well as our September one. So I'm going to basically walk you through the topics that we learned here this year, make sure that we point you in the right direction. And then at the very end, we'll open this up for Q&A. Really, this is going to be a fairly open-ended Q&A. You can ask me anything regarding options education, regarding options trading, the general markets. So today we're going to keep things fairly open. But before we get started, I just want to make sure everyone here that's watching this today, if you're brand new to options trading or if you're an experienced options trader, one of the great things we have is a partnership between the TMX and Options Play that brings Options Play Canada to all Canadian investors completely free of charge. You can sign up for that using the link that's here on your screen, which I just posted into the chat window. And this will give you access to the Options Play tool, which we'll show you here briefly today. It'll give you access to bi-weekly options education like the session you're on today. We send out daily cover call reports to give you a better understanding of opportunities to generate income using cover calls, cash secured puts, as well as the ability to utilize the platform to set up multiple strategies side by side and allow you to compare them so that you can have an understanding as to the strategies that you're trading before you execute them in your portfolio. So a wealth of information that, again, is available to you completely free of charge as part of being a Canadian investor, courtesy of the Montreal Exchange. So during today's session, the primary thing that I want to help investors answer is, what topics have we covered in 2020, and how can you access any of these previously recorded courses that we have put together for the year? So that's what I want to go over. And so my name is Tony Zhang. I'm the chief strategist here at Options Play. Every single one of these courses were taught by myself. So if anyone here has attended a course that I have hosted, please type 1 into the chat window if you've hosted a course that I have hosted on options trading. And please type 2 if you have never attended a course that I have hosted, just so I can get a sense for the audience here in the room. Okay, it looks like pretty much all ones here. So you're familiar in some degree of the courses that I have hosted. Now, today, what we're going to do is perhaps you haven't attended all of them. Perhaps you missed some because you're on vacation or whatever the reason was. So today, what we're going to do is we're going to review everything that I taught in 2020 and show you how you can access those courses if you missed them or if you simply want to review them here again. Now, before I get started, I just want to get a quick poll here for the room. I want you to type either 2, 3, or 4, depending on whether you're a beginner. Please type 2 into the chat window. If you are an intermediate options trader, or if you have some experience trading, please type 3. And if you feel that you're a very experienced options trader, please type 4. I just want to get a quick sense for the audience here in the room. Okay, so I see a pretty healthy mixture of 2s and 3s. I see a few 4s in there. So most of you are either starting out in options trading, or you feel that you have some experience, but not quite an advanced options trader or an experienced options trader. Okay, perfect. So we're going to go over all of them. So in 2020, we really covered a vast array of topics on options trading. Everything from introduction to options, talking about the strategies themselves. We talked about order entry, everything to do with, how do you enter an order? How do you determine what price to enter an order? What are the best practices for managing a position? We talked about trading psychology. We talked about live market analysis and commentary. So like I said, we covered a vast number of symbols. So one of the vast number of topics. So the first thing that we did for you is we put together a playlist of every single educational event that we've put together in 2020. I'm going to post this link into the chat window. Now, you don't have to necessarily go to that link, because we do break it down for each individual section. If you don't want to look at a full list, you don't have to, but for those of you that want to see everything that we covered in 2020, the list is there on your screen. I just posted that into the chat window. But like I said, 2020, vast number of rates. Actually, I think is the most number of educational sessions we have done since we started the partnership with TMX in 2017. So I'm really excited to, again, review with everyone all the things that we have accomplished in 2020, hoping that you'll be able to take some time to review them before you start your trading next year, so that you have a better foundation and a better base to start your year for next year. So I'll start off with the beginner trader topics, which many of you answer that you're relatively new to options trading. So we have a 2-part beginner series that I think is very important for if you're brand new to options trading, or if you're just learning how to trade options, to make sure that you go through to have the right foundations. I can't stress enough how the fact that trading options is something that takes quite a bit of time to learn. Your average retail investor who's not doing this full time, meaning you have your 9-to-5 job, you're interested in learning how to trade options, you're dedicating maybe a few hours a week to learning, if that's kind of the time frame that you're looking at, generally speaking, you're going to find that it might take somewhere between 3 to 4 months before you get to the point where you're comfortable enough to start trading options. And because of the fact that trading options takes quite a bit of time to learn, I tend to find a lot of beginners, they get a little impatient and they skip ahead. They learn some of the basics and they immediately skip ahead. They're thinking that, oh, okay, I know what a call or a put is. Let me start trading debit spreads or strangles or all of these various strategies. But I can't help but stress how important it is to build the fundamentals, have the fundamental building blocks, understand that first. If you have a strong understanding of the fundamentals, I can throw any strategy at you and you should be able to understand it. But if you don't have a strong sense for fundamentals, yes, you might learn some of the intricacies of trading one strategy because that's what you ended up trading. But once I throw a variation of that strategy to you, or once there's a change in the markets, you find it harder to adapt. So I really, really stress for those of you that answered 2 in terms of you're relatively new to options trading, please take the time to go through part 1 and part 2 of the beginner options series. The first one, we talked about basically just helping you get started. In this particular session, all I talked about was, if you took the time to learn how to trade options, what do you get out of that? Giving you a glimpse into the future so that it motivates you and inspires you to go through the education so that you can get a sense for what you can achieve with an options trading knowledge. The second thing that we covered in that course that I think is absolutely important is the basics of what a call and a put contract is. At the end of the day, when you're trading a derivative or trading an option, you're entering a contract. Just like a legal contract that you're entering, you should have a good sense for what are the ramifications of that legal contract. I see so many beginner investors skip ahead on this stuff and not really pay attention, thinking to themselves, oh, trading an option is just like trading a stock. But a stock is not a contract. An option is a contract. You better understand what are the primary what are the two sides of the contract, and what does it mean to be on one side of the contract, and what does it mean to be on the other side of the contract? This fundamental understanding is absolutely critical to your understanding of option strategies. Without a true understanding as to what the option contract you're entering as a buyer and what is the option contract you're entering as a seller, you will struggle, in my opinion, for options trading, especially as you get to more advanced traders. So I highly recommend to take the time and make sure that you spend the time to learn, the basics of a call or put contract. Then what we do is we get into buying and selling an option contract, because like I said, there are two sides to an option contract. You could be a buyer or you could be a seller, and you could either buy a call or you can buy a put. So those are the 4 contracts effectively that you can potentially get yourself into. So in buying versus selling options, we talk about the 4 possibilities and what they actually mean. What ramifications do you actually have from those for being one of those 4 and making sure that you understand that. And that, in my opinion, these two webinars, I think, are probably the most important option webinars that you can learn, that you can focus on as a beginner. Because these really, again, cover the fundamental building blocks. If you can understand the basic building blocks of all 4 possible strategies, it doesn't matter whether I throw a 2-leg strategy, a 3-leg strategy, a 4-leg strategy, strategies with different expirations, strategies with different calls and puts, you will be able to understand it if you have this fundamental building block. But I tend to find a lot of investors, they want to skip ahead. They want to skip to the actual strategies. They want to skip to, start trading, and they kind of forget, or they don't spend the time to learn these fundamental building blocks. And that's where I see traders struggle later. And I see the questions that are being asked, the basic questions when we start talking about debit and credit spreads, asking me, why would I buy this? Why would you sell that? And all of these things, those questions come up because these are the investors that didn't take the time to learn those fundamental building blocks. So please, if you're in the beginner process, take the time to learn part 1. Once you have that fundamental building block, then at this point, we haven't talked about any strategies, meaning you don't have anything, after you finish part 1, you really have no practical knowledge to start trading options, because at this point, all you understand are just contracts. You have no knowledge as far as the actual trading of it. You have nothing that you can actually apply to a portfolio. And that's built by design. It's built so that we really spend the time to learn. In part 2, that's when we start layering in strategies that you can actually start implementing in your portfolio. And we start with the most basic, but also the most popular trading strategy, which is cover calls and cash secured puts. And I would say 80% of investors who start trading options start with cover calls. Most of them don't start with cash secured puts. But in this particular course, I teach cash secured puts and cover calls, because the 2 strategies go hand in hand. If you're trying to generate yields for your portfolio, the first course in part 2 has nothing to do with options trading. It really has to do with your stock portfolio and thinking about how you can improve your stock portfolio by utilizing options to buy the stocks that you want to purchase and then eventually sell the stocks that you currently own. Because most investors think about options as this completely separate thing from their stock portfolio. You think of your stock investments as your long-term investments, or perhaps your stock trades, and then you think of options as a whole separate entity. But the two are actually very connected. And once you learn the connection between the two, that's when, in my opinion, that the world of options really opens up to you. And that's why I spend the first course in part 2, talking about how options can be leveraged to help your stock trading or your stock investing. Once you learn that, then we can start talking about this whole separate side of options trading, which is speculating. So, if you've seen if any of you that have watched, some of the things that has happened this year, where you hear someone makes a ton of money this year on the crash of the markets during the coronavirus, or people who made a ton of money because they bought call options on stocks that really went through the roof, on the recovery. That was utilizing options to leverage their capital. And that in itself is a whole different other way of using options. So we talk about that in part 2. How can you add leverage to your portfolio, but do so in a way with limited risk? And that's the asymmetrical risk profile that you get with an option strategy. Options allow you to leverage your capital, but do so in a way with limited risk. And all of these courses that I do, instead of just constantly teaching you new topics and going on and on and on, every single course that we do, we always have a live market analysis session after 2 courses of teaching, because we always want to make sure that we pause and actually show you how to implement what we've learned. So all of the master courses that I teach, we always make sure that we take some time after we teach 2 courses to review what you've learned, and I take what you've learned and I apply it to the real markets, because that, in my opinion, is the best way to learn. Understanding a concept is different than knowing how to apply it to your portfolio. So the live market examples with Q&A are designed to take a pause, take what we've learned, review it, show you how to apply it to some real symbols in the real market so that you have a better understanding as to how to apply that for your portfolio. So that's the structure that we have here for our master classes. And again, I'm spending a little bit of time on the beginner side because I think this is by far the most important course that you can take, especially for all of you that answered number 2, that you're a beginner. And I would argue that even for those of you that answered number 3 and number 4, these are very, very good reviews, because I can't help but think there are plenty of investors here who answered that they were either number 3 or number 4, meaning has some experience options trading or feel that you're very experienced in options trading, that may have skipped some of these beginner courses because you wanted to start trading, because you wanted to start generating income, you wanted to get your feet wet. And I understand that, right? Because that's the best way to learn, is to start trading, start getting your feet wet, start risking some real capital, even if it's a small amount. I get that. But sometimes in the pursuit of that, we skip some of the basic courses. And I highly recommend, even if you're a beginner, even if you're an experienced options trader, to take some time and review the beginning courses. And especially if you're going to the holidays, if you have a little bit more time, if you're not traveling because of this year, take that time to learn. This is a great opportunity. That's why I wanted to do this session here before we break for the holidays. So that's what we covered here for the beginner course. If any of you feel that you need to review on the beginner courses, please type 5 into the chat window. I'm curious as to how many of you feel that you could use a review of the beginner topics here. Okay, I see quite a few 5s. Great. So for those of you that are able to over the holidays, I highly recommend it. We're going to send you both a recording here today as well as the slides. So you'll have these links after we finish here today for you to access the beginner's master course. For those, once we pass the beginner topics, right? Once we understand the basics of a call or a put contract, the difference between buying or selling that contract, covering some of the basic strategies that you can achieve by selling calls, selling puts, buying calls, and buying puts, then we start getting into the more intermediate topics. This is really where we merge the some of the concepts around options trading, some of the theories around options trading that help you select, the optimal strategies, as well as the mechanics of options trading, that's one of the things that I feel like a lot of options education missed the mark on. And I wanted to spend some time, which is number one, entering option orders. A lot of professionals or experienced options traders like myself, we sometimes take that stuff for granted because we've been doing this for so long. It's second nature to us, but we forget that the process of entering an options order is very, very different from entering a stock order. And different brokers support different order types. Different brokers, some brokers support single leg, other brokers support multi-leg. So we wanted to take some time to really understand the basics of entering an options order and exiting an option position. So that is also, in my opinion, very, very important, especially for those of you that answer that you're just starting out with the learning process. Now, the second part of part one in the intermediate course, which I think is also important, is selecting optimal expiration dates and strike prices. Any of you that have traded options for even more than a day, you know that there are a lot of expirations and strike prices that you can choose from. So the question that most investors ask us is, which strike price and which expiration date should I choose for my strategy? And I get this question pretty much all day long in my inbox. People sending me questions about saying, I'm bullish on this stock or I'm bearish on this stock. How do I choose an expiration date and strike price? Now, here's the thing. Each strategy itself, generally speaking, has best practices, but those best practices are based on a common theory and a common concept. So in this particular course, we teach that concept. So you have a better understanding as to if you're buying, if you're selling, if your view is that you're bullish or bearish, how do you go about selecting the optimal expiration date and strike price? Because that is the concept that we actually apply to each individual strategy. So it's important that you understand that overarching concept, because then you can help apply that, or it makes it easier to understand when you're looking at specific strategies, why we're picking specific expiration dates and strike prices. And just like before, just like the beginner master courses, we always take time to stop and review what we've learned and show you some real examples using real symbols to apply what we've learned. That is the cadence that we always take. And then what we talk about is managing complex order entry. So like I said, in this particular case, we talk about single legs, right? So for those of you that are brand new to options trading, maybe single leg doesn't mean anything, multi-leg doesn't mean anything to you. As you start to learn more, you'll understand that as you trade options, you can either trade a single contract at a time, or you can trade multiple contracts at the same time. So that's what we call the difference between single versus multi-leg options. Some brokers only support single leg. Some brokers don't support multi-leg. Other brokers support all the different order strategies. But from my perspective, to be an effective options trader, to truly benefit from how options can be leveraged in your portfolio, having access to multi-leg options can be quite beneficial to you. It's mostly helpful in helping you reduce risk. Many times a lot of investors think of options as a risky asset class, because you may have heard of stories of someone who blew $10,000 in a single trade overnight, or lost a lot of money on a single trade in a short amount of time. Yes, options can be leveraged very highly and can be very risky. But if you look at any of the examples that we show you in any of our courses, you'll see that any strategy that we talk about and we teach are all designed to help you reduce risk. Now, even single leg strategies can help you reduce risk, but multi-leg strategies can help you reduce even more. And that's why I stress the ability to learn and understand multi-leg options. And so we talk about how to enter these complex orders, and more importantly, how to exit and manage these complex orders. And then, from my perspective, then we start getting into some of the topics that are really relevant for you as a trader. And this comes down to trading psychology. And this has to do with the work that I have done over the past 15 years as a market strategist, working with thousands of retail and institutional investors, helping them understand the market color, helping them understand a strategy. But at the end of the day, what really matters in terms of your profitability comes down to psychology, comes down to how you think about managing risk in your portfolio. So in my opinion, even if you're not interested in trading options, even if you start the education process and you say, you know what, this is just not for me, I'm better off just trading stocks, or I'd rather trade futures or Forex, I would advocate that you take a time to learn risk management and trading psychology, because that is applicable no matter what market you trade, whether you're trading stocks, futures, Forex, commodities, options. Risk management and your trading psychology is the number one indicator that I have found as a market strategist that will give me an indication as to whether a trader will be successful or profitable in the long run or not. There are plenty of traders that make a lot of money in the short run, but that rarely means that they can be consistent and profitable in the long run. To be profitable in the long run comes down to, in my opinion, risk management and trading psychology, not your strategy, not your indicators, not what technical analysis you use. Yes, those things are important, but you could be the best technical analyst in the world and still blow up your account because you have the wrong trading psychology and the wrong risk management. So I advocate for investors who are trying to learn how to trade options that just learning how to trade options in itself, and learning technical analysis and learning how to read the markets and gain a directional view, that in itself, it's not enough to consistently be profitable in the markets. To consistently be profitable in the markets, you have to have the right mindset around managing winners and losers and accepting the fact that you are going to have some losers. And that really comes down to the mentality that you have around trading. So I can't stress enough how important that is. And that is something that I cover here in risk and money management. So I highly, highly recommend for those of you, even if you're not trading options, to learn more about that. And again, you can access all of our intermediate master courses using the link here on your screen, which I just posted into the chat window. And I'll send you again the slides and the recording here for today. Then we start getting into some of the multi-leg strategies. Okay, this is where we start to really dive into how you can leverage options to really fine tune any directional view that you have. Whether you are really bullish on a stock, really bearish on a stock, slightly bullish on a stock, slightly bearish on a stock. How you can make money in all different scenarios. And this is really where the creativity of options comes into play. For those of you that had the chance to join me and Steve on Monday this week, where we talked about a lot of different scenarios, a lot of different markets. One of the best things about options is that regardless of what your views are, you can create an option structure that can be profitable no matter what your outlook on the underlying stock is. So in this options master course, where we talk about debit vertical spreads and credit vertical spreads, this is just giving you a glimpse into what is possible in the world of options. Debit and credit spreads are two very, very popular option strategies. They are the multi-leg strategies. So if you're trading at a brokerage firm that doesn't offer multi-leg trading, there is a major limitation, in my opinion, in terms of your ability to express different views in the markets. So I highly recommend for those of you that are trading at a single leg broker to think about and either contact your broker and tell them how important multi-leg trading is for you, so that they invest in the technology to provide you with multi-leg trading, or seek out a broker that does offer multi-leg trading. Because again, debit and credit vertical spreads, they're just the first step in understanding that world of multi-leg trading. Once you learn debit and credit spreads, there are a lot of variations that you can actually start tweaking on top of that. You can trade calendar spreads, you can trade diagonals. If we talk about butterflies and condors, they're built from debit and credit spreads. So it's really important that you understand these two strategies first, and then how to manage these complex order entry and using some real examples. And all of these, we use real examples so that you can learn how they can work. So this is something that's covered in the intermediate course, which again, I will post that link into the chat window. So if you think that you might take a look at the intermediate course over the holidays, please type 6 into the chat window. And I know some of you trade in registered accounts, and that you can't trade multi-leg options in your registered accounts. I understand that, right? So if you only trade in a registered account, then there obviously are limitations. There's nothing, unfortunately, that I can do to help get you around that. But maybe that inspires you to potentially open up a separate brokerage account, a taxable brokerage account, so that you can leverage the views that you have in the markets to trade these types of strategies. Okay, so I see a lot of sixes. A lot of you seem interested in this intermediate course. Again, I can't help and I can't stress enough, even if you're not interested in options trading, even if you take the time and you say this is not for me, do take the time to learn part 2 of the intermediate options course, where we talk about risk and money management. That lesson that you learn there, that psychology that you learn there, is applicable to other markets that you're trading. And then lastly, we jump into the advanced master course. This is for those of you that have that fundamental building block of option strategies to start thinking about how you can leverage the other things around options trading to help you become successful. We do everything from intro to trade management, which is really around, what are the best practices for once you're in a trade? How do you manage those trades? And then, talking about technical analysis. This is something that's very near and dear to my heart, because I have spent the last 15 years of my career using technical analysis to gain a directional view. And I'm not going to sit here and necessarily preach technical analysis here, but the reason that I use technical analysis is because it's a single form of analysis that allows me to gain a view not only across equities, but interest rates, commodities, futures, any other asset class that I need to gain a view on in order to trade the asset class that I want to trade. So I'm predominantly trading equities in my portfolio, but equities are heavily tied to interest rates. They're heavily tied to some commodities, depending on which equities that you're trading. So these are all things that I need to pay attention to as an equities trader. Now, if I was a fundamental equities trader, there's nothing wrong with being a fundamental equities trader. But if I was a fundamental trader, meaning I had a deep dive fundamentals of each stock that I'm interested in buying or selling, that same skill set that I have to analyze the balance sheet and the fundamentals of a company, I can't apply that to interest rates. I can't apply that to commodities. I can't apply that to other markets that affect the equity markets that I'm trading. And that's the limitation that I typically see with fundamental analysis. Now, I still believe in fundamental analysis. I believe that if you're going to buy a stock based on technicals, you should have a good sense for what the fundamentals of that stock are, because you don't want to just buy a stock blindly based on the chart. You want to buy a stock that you not only believe in the timing, but also the fundamentals behind it. So that's my view in terms of using technical analysis. But technical analysis is a very good tool to help me narrow down, out of the hundreds or thousands of stocks that I can trade, which 4, 5, 10 stocks do I want to focus my time on today to research, because the timing is right. Now, I still want to research the fundamentals, but the timing on these 10 stocks or 15 stocks today may be right for a potential breakout. So let me research the fundamentals. Let me find out more about these 10 stocks and see which one do I also have a strong fundamental view on. That's how I go about doing my trading. So I talk about how to leverage technical analysis, and I talk about what tools that we have built into the options play tool that teaches you, that helps you, analyze and help you sort through the hundreds or thousands of stocks in the market down to a few that you want to pay attention to. And again, we do a live market analysis where we go through stocks in the market. We show you how I use my technical analysis to filter down the trades before I look at some fundamentals, and then leverage my options trading for that. So that's something we cover in the advanced options course. And then for those of you that want a little more in-depth understanding, there are 3 topics that are very important. Number 1, options pricing. This really comes down to the fact that when you're trading an option, you are trading a contract. You are not trading an asset like a stock. You're not trading a future. You're not trading a currency. You're entering a contract. So you have to understand how the contracts are priced, right? Because what you're effectively doing is you're saying, I want to enter the contract. The contract has a price. And based on certain factors in the market, that will either increase the value of that contract or decrease the value of their contract. Because what you're effectively betting on is either that contract is going to increase in value or decrease in value. So when you look at a stock, there's really one thing that will increase the price of a stock, and that's more buyers. But the price of an option is affected by a lot of things. It's affected by time, it's affected by volatility, it's affected by interest rates, it's affected by the underlying stock price. There are a lot of things that go into the price of an option. So if you don't understand all the factors that go into the price of an option, you're doing yourself a huge disservice, because what happens is you could think that, oh, if the stock goes up, the call option must go up, but you forgot to factor in volatility, you forget to factor into time, and those maybe two things offset any gains that you have in the underlying stock. And I see this so often. And if you can relate to this, please type 7 into the chat window. If you've bought a call option, the stock went higher, but then you lost money on the call option. If you can relate to that, please type 7. And I see a lot of 7s going through. And that comes down to either not understanding or didn't realize how big of a factor time and other factors like volatility have on the effect of the price of the option. So a lot of people just buy call options thinking that as long as the stock goes higher, I make money, forgetting the fact that there are a lot of other factors. So we talk about those option pricing factors in the advanced course. We also talk a slightly in-depth understanding of volatility, even though we covered that in the more advanced understanding of volatility. This is where we dive into historical volatility, implied volatility, what these volatility numbers mean, what are the different ways that you can measure volatility, what are the different ways that you can determine whether volatility is cheap or expensive, a lot of things that traders use. So very, very important topic for those of you that have a little bit, have that basic understanding of options trading and can start looking at these more advanced topics. And then also an understanding of option Greek. So before I talked about the fact that there are a lot of things that go into the value of an options price, but how do you actually measure how these things affect the options price? So we said we know that time, volatility, the price of the stock all have effects on the value of the option contract, but how do you actually measure it? And that's where the option Greeks comes into play. The Greeks help us measure how big of an effect does time have on the option contract? Does volatility have? Does the underlying stock, interest rates, all of these things, how big of an effect does each one of those have on the specific contract that you are trading? So in the understanding option Greeks, this is where we help you quantify and learn how to quantify the different factors that affect the value of your call or put option that you're trading. So these are the things that we cover in that advanced course. Now, maybe this is a course that's a little bit ahead of, for those of you that answer that you were brand new to options trading, if you answer number 2. But for those of you that are interested in the more advanced courses, please type 8 into the chat window. For those of you that think you'll be taking some time to review the advanced courses. So, if any of you that have already started trading options, so all of you that answered either 3 or 4, I recommend that you take the time to learn some of these advanced topics, because not understanding options pricing, not understanding volatility, not understanding the Greeks, you're really doing yourself a disservice, because there are things that are affecting the value of the assets that you're trading or the contracts that you're trading that you're simply not aware of, you're not measuring properly. So please take the time to learn those things before you continue with options trading. Otherwise, again, I think you're doing yourself a disservice, okay? So those are the master courses that we covered in 2020. These are the educational courses. These are the courses that are designed from the ground up to really help anyone who's, regardless if you're brand new or if you're an experienced options trader, to build your knowledge and try to go through as many examples as possible to show you how you can apply them. But we also launched in 2020, and this is something that's very exciting. And I was very, excited to launch this in 2020 and very excited to continue this into 2021, which is our Market Outlook series. So, in the previous years, we only did education. We only talked about option topics. We told you roughly how to utilize them with options play, but we didn't spend a lot of time talking about the markets themselves. So this year we launched a series where all we did was talked about the market themselves. We did quite a few of them during the summer. We launched a few during the July weeks when we weren't doing any education. We did them in July and August, and then we relaunched them here in November, where we did multiple ones in December. Now, actually, we only have November 7th and December 7th. So this is a series that we've partnered with Interactive Brokers on. Steve Sausnick was the chief strategist of Interactive Brokers. I consider myself and you guys lucky that we get to have Steve every single month to talk about the market. Steve is the chief strategist of one of the largest brokerage firms around the world, and we get to pick his brain about how he's viewing the broader markets. We discuss equities, we discuss fixed income, we discuss macro, we discuss oil, we discuss gold and silver, anything that's relevant, and especially changes in volatility. I think it's a fantastic view into how a strategist like him and myself view the current markets, giving you that insights. Normally, institutional customers pay a lot of money to have access, one-on-one access to a strategist like this. So I'm really, really excited that in the year of 2021, we're going to be doing more of these with TMX and Interactive Brokers. I would like to continue to do this at least on a once a month basis going into 2021. So I'm really looking forward to that. And I hope, how many of you have caught those sessions? Please type 1 into the chat window if you caught any of the sessions that I've had with either Steve Sosnick or Patrick Ceresno. Many of you know Patrick Ceresno from Macro Voices. I did one with him in August. I'd love to have him back here in 2021 as well. But these are meant to give you just a view of the markets as a whole. Not talking about options specifically or option strategies, but just talking about where we currently view the markets from a macro perspective. And I think that's very, very important for traders who are trying to gain that bigger picture view of where markets are headed. Okay, so I see a lot of ones. So I hope that you guys continue to come back to those sessions here in 2021. But if you want to review any of the recent ones, the last one was just from this Monday. So I highly recommend you to take a look at that from this Monday. The ones from previous ones, I would say, aren't so relevant because, they're from a few months ago. So what the macro view a few months ago, I don't think is as relevant to today, but we just hosted one this Monday, 2 days ago. So go and watch that if you haven't had a chance to watch that. I just posted a link into the chat window with these sessions. So we recorded all of the market outlook sessions and made them available to you as well. And lastly, we normally do options education days. I usually fly up to Canada. We usually do them in Toronto, Montreal, and usually one on the West Coast, either Vancouver or Calgary, sometimes both. But this year, due to COVID, we've had to do them virtually. And I actually quite enjoy doing them virtually because this allows everyone around the whole country to attend at the same time. We've had the biggest turnouts we've ever had because normally at these physical events, we get about 300 people. We had over 1,700 people at some of these events. And this really, for me, was a great event to put on. And we were able to put on very similar events, but it was also recorded, which means that you can, even if you weren't able to attend live or you weren't able to be there for all 4 hours, you can watch the recording at your own pace. We did the first one on April 27th. This is where we did an intro course from Luke, which is from big big picture trading with Patrick. So Luke and Patrick started off with getting started in theory into applications. I did one on trading earnings with limited risk. This is a topic that we don't cover a whole lot during our options education series. So I'm glad that I was able to sneak that in 2020. And then Chris Tome talked about building and protecting your equity portfolio using options. So he talked about selling cover calls, selling cash secured puts, and buying a protection on your portfolio. Another topic that I didn't get a chance to cover in 2020. So I'm glad that we did cover that during the options education day. So if you want to watch a recording from the April session, you can click on this link here on your screen. And then we did the same thing in September. We're going to be doing 2 more next year as well. Hopefully we're going to be able to do some physical events towards the end of the year, but in the beginning of the year, we're definitely going to be doing another physical one. Looking forward to that. We just hosted one in September. This one we did, where we talked about core concepts and fundamentals from Ed, who is from the OIC, the Options Industry Council here in the US. Fantastic teacher. I did the session on buying versus selling options. This is a bit of a revisit to the first course, part 1 of the beginner's course. This dives into, again, the basics of an option contract. I can't stress enough how important it is for all options investors to have a clear sense for the fundamental building blocks. If you understand the fundamental building blocks, I can throw any strategy at you and you'll be able to understand it. That's how when an investor throws a random trade in, to me on a live event, how I can understand what they were trading. It's due to my fundamental understanding of options. So you can throw a random 3-leg trade at me and I could get a sense for what you're trying to do here. It doesn't matter what 3-leg trade you throw at me because I understand understand the building blocks of these strategies. So make sure you understand those building blocks as well. If you do, I can throw any strategy at you and you'll understand it. Otherwise, you'll be confused as to what someone is trading. Then we talked about, cover call writing with Jason. This is another, again, very, very popular option strategy. Even though it's not the sexiest strategy, it's probably the most boring of the strategies. It is what 40% of the options volume traded is in this one strategy. So even if you think it's boring, even if you don't think it's sexy, you're not very interested in it, it is a strategy that allows you to generate a lot of income for your portfolio. So please take the time to learn. And then Rolly really followed up with this options in action, which I thought was a cool change to the normal options education. She really went through a lot of live examples of how to apply options to different various viewpoints that you may have in the portfolio, just as different perspectives. So I really enjoyed that. And that was a nice way to wrap up the September one. So you can also have access to that using the link here on your screen. So that gives you a sense for all the things that we covered here in 2020. As you can see, we covered a lot of things. All of these are available to you. I've sent a link to everyone here in the chat window. If you missed it, we will send out the recording. We'll send out the slides to you so that you have these links to you in your inbox, and you can review this at any time. Do it over the holidays when you have a bit of time. Do it when you have some time. Review them before you get into 2021, so that when we launch our new options education series in 2021, you're brushed up. You have that fundamental building block so that you can really take advantage of what we learned in 2021 and build on top of your knowledge. So with that, I want to, again, thank everyone for taking the time out here this afternoon. And I want to thank everyone who's attended one of my sessions in 2020 or any of the other sessions that TMX has hosted in 2020. I hope that this was helpful in giving you a review of what we've learned and how you can access it. So at this point, what I'll do is I'll open this up for Q&A. And if you have any questions regarding the education, any questions you have regarding options trading in general, feel free to ask them, and I'll try to answer a few questions before we sign off here. And if I don't have a chance to talk to you again before the holidays, I just want to wish everyone a very happy holiday. I hope that everyone stays safe this particular holiday. And I know this is going to be a tough time for some if you're not able to travel to your family and see your family. So I really hope that you guys have a safe and happy holidays. So with that, again, thank you so much. If you have any questions, there's a Q&A window at the bottom and there's a chat window at the bottom. If you don't mind, please type your questions into the Q&A window and I'll answer your questions out of the Q&A window. So thank you so much for all of you that wished me well. I really appreciate it. And again, for those of you that feel that you've learned a lot, over 2020 in terms of options education, thank you so much. I really appreciate it. That's really what makes my work rewarding. And I'm glad that you guys are able to find this. And Karun, yes, all of these videos are available on YouTube. All the links that I sent you are YouTube playlists. We've condensed them for you. We've put them into separate sections so that you can easily go through the courses. And they're all sectioned based on beginner, intermediate, and advanced. The market outlooks have a separate playlist. The virtual options education days have a separate playlist. It's all designed to give you that understanding of the courses. So taking a look at the questions here, Raymond, thank you. Good afternoon to you. Rai is saying, Tony, if one has two accounts at two firms, does the strategy like protective short sale has to be done in one single account under the same firm? If not, how do you short sale in firm A while exercising? So Rai, if you're trying to use one position as an offset for the other position, they have to be in the same account at the same firm. You cannot have them at two separate firms and two separate accounts. Wallace saying, hi, Tony, with Canada approves Pfizer vaccine today for mass national vaccination, what's your view and outlook to the Canadian market overall? So here's my take, Wallace. The vaccine approvals were by no means secret. It's not like no one knew this was going to get approved, and all of a sudden we got the news that it's going to approve today. This was largely expected. So this is a non-event in my opinion. If anything, this is more of a buy the rumor, sell the news type event, where now that the vaccine is being approved and being distributed, now we might actually see the market start actually sell off a little bit, because again, this is not news to anyone. We knew that countries around the world were likely going to approve the vaccines in this time frame, between mid-December and the end of January and the beginning of the year. Our expectation for 2021 is for the other few, Johnson & Johnson, AstraZeneca, to also get approved as well. So from my perspective, it's not in itself an event to buy or sell per se. And if anything, I actually think it's more likely that's an event to sell rather than an event to buy, because it's, again, not anything new. Barry is saying, Tony, I understand your approach to working your orders to try to save pennies and nickels. However, the price of stocks and therefore options fluctuates many dollars during the day. Isn't this more important than working an order? Barry, so yes, it fluctuates a lot of the day, but unless you know where it's going to fluctuate throughout the day, that's not really useful to you, right? So you only know what the price of the option is at the time you enter the order. I mean, you don't know if the option is going to be cheaper at the, later in the day. So yes, but also no. When we say saving pennies and nickels, once you multiply that by 100, which is 100 shares per contract, multiplied by the number of contracts that you're trading, pennies and nickels really add up. And that was my point that I was trying to say. If you can save $80 on your options order because you're trading 8 contracts and you're saving 10 contracts and you're saving 8 cents on an order, that's $80 that you're effectively throwing out the door if you're not working your orders. So yes, if you want to optimize your orders by trying to buy at the lowest point of the day, you can. But Barry, like I said, you don't know where the markets are going to be in the future. Unless you do, that's really useless. You only know where the market is trading at the time you enter your order. What I'm trying to say is work your orders at the time that you enter your order. If you choose to enter your order at a specific time to get the best possible price, that still doesn't stop you from trying to get the best possible execution at the price that you want. So what you're talking about is getting the price that you want, and what I'm talking about is getting the execution that you want. And those are two different things, and they're not mutually exclusive. You can still work your orders at the times that you want to work your orders because you think that that's the lowest price you can get for the day. But I'm still saying that during that time, work your orders so that you get the best possible execution. So I hope that clarified for you, Barry. And again, to everyone that's wishing me well for the holidays, thank you so much. I really appreciate it. Wallace is saying the only multi-leg strategy allowed in a registered account is a long straddle, and long strangle, as well as a buy right covered call. So Wallace, as a market strategist working options for this long, I don't know of anyone that has consistently made money going long straddles and long strangles at ever. So if you can somehow make money going long straddles and long strangles, power to you. I don't know of a single person that generally has done that, because you're paying time premium on both sides. Time premium is hard enough to overcome on one side. Time premium on both sides is almost impossible, in my opinion, to overcome. So I don't recommend going long strangles and long straddles. Barry, you're very welcome. I'm glad that we did this review then to show you what we've taught this year so that you can take that time and learn a little bit more. Mohammed, thanks, Tony, for all your work. These have been a great help for me to improve my options trading. Thank you so much, Mohammed. I really appreciate you sharing that with me. Recently, I saw a sub-menu in my National Bank brokerage account about options play. Doris, you're absolutely right. We recently just launched options play within your National Bank platform. This was just launched this Monday. This is brand new. We're still in the early days of the integration. But you can now access options play, both US and Canadian, through your National Bank brokerage account. Anil, thank you so much. I really appreciate it. Thank you so much. Have a great holiday. Can you tell us more about the platform you say is trying to come to Canada? Joseph, I think you're referring to maybe Tastyworks. Is that what you're referring to? It's not a platform. It's a brokerage firm. It's a brokerage firm here in the U.S. It's a popular brokerage firm because they offer multi-leg trading, and this is one of the platforms that a lot of investors here in the U.S. Trade on, and a lot of Canadian investors have been asking for that platform. So they're coming. It's the same guy who started Thinkorswim, Tom Sosnoff. Are the slides available for the different videos? So Alan, all of the videos, if you go to any YouTube video that we have, so let me just click on one of these links. If you click on any particular video, with the exception of the options education days, hold on, let me show you some of the videos that I have created. So if you look at any of the playlist, right? For any video that you click on, in the description, I generally have the links to the slides. Let's see. You see how in the links there's the slides here in the description. So the slides are available to you in the description of each video. So yes, the slides are available for each of the videos. They are in the videos themselves in the description. My question is about rolling cover calls to a higher price and later date. What is the optimal time to roll for a cover call? Generally speaking, you want to roll about 2 weeks before expiration is generally the optimal time to roll if you're rolling it up and out. 2 weeks out, 2 weeks before expiration, you roll it about 45 days out is where we typically start our research in terms of expiration dates. And our strike prices, we usually go around a 20 delta as a starting point to our research for a roll on a cover call. Julie's saying, have learned a lot from your classes. Thank you. What's the best way to ask a question to options play? Great question. So I think the best way to ask us a question is by when you log onto your options play platform, on the upper right-hand corner, there is a questions ask us widget. This allows you to send us a ticket directly to us. So as you can see here on the upper right-hand corner where it says questions ask us, when you click on that, you can effectively contact us directly. That goes to me and my support team, and we'll answer questions that you send to us through that platform. So Julie, I think I remember that particular ticket. I don't remember what stock it was, and we were taking a look into that. So please send us a question here through this questions ask us button, and we'll try to look into that issue for you. But I do remember that that ticket that came in. Sergio saying, I'm comparing 3 brokers, Questrade, Interactive Brokers, and TD Warehouse, to switch from the broker I have now. Any thoughts on them? I need to trade multi-leg options. If I'm not mistaken, all 3 of those brokers you mentioned, Sergio, all offer multi-leg options trading. Barry saying, I guess my question is how and when do you determine when to put on the trades? So Barry, you were saying that you use technical analysis. So from my perspective, if you really want to get intricate in the intraday technical analysis, you can, but I generally don't do that. Because options are not that sensitive as they are to the underlying stock. Stocks tick every single second. Options don't. That's part of what I like about options trading. I'm not constantly chasing an order. I can work an order based on the current price. And usually my orders, I'm looking for moves that happen over a few weeks' time. So this intraday swings, in my opinion, are not as concerning to me. That's why I don't worry that much about intraday swings. Karun is saying, I wish you a happy holidays and very wonderful happy new year. Thank you so much, Karun. I really appreciate it. Hope in a year you can focus more on managing trades alongside with strategy building courses. Thank you so much for that feedback, Karun. I will certainly consider that going into next year. Currently trading in a registered account, could you cover the margin requirements or strategies that sell options? So Suk, each brokerage firm typically has their own rules. There are minimums for margin requirements, but brokerage firms typically ask for more. So that's a question for your brokerage firm. Ask your brokerage firm, what do they ask to sell an option? But generally speaking, the only option that you can sell in a registered account is a cover call. And for that, there's no margin requirement. You just have to own the stock. So if you're trading in a registered account, I don't think you have the ability to sell. Only in a taxable account do you have the ability to sell. So for those accounts, ask your brokerage firm what their margin requirements are to sell option strategies. Will you eventually invite Tom Sosnoff to Canadian webinars? Once Tom Sosnoff is launched in Canada, I promise you I will probably have a series with Tom here in Canada. Azim, thank you so much. I really appreciate it. How do you sell credit spreads on Excel in Canada? I'm not sure what you mean by on Excel, Raheem. If you don't mind clarifying, I'm not sure how you sell a credit spread on Excel. So Raheem is saying, do you send liquidity and credit spread Excel spreadsheets? So we have liquidity spreadsheets here at the bottom of your screen. So we do calculate liquidity for Canadian investors down here. You can click on the liquidity link to launch that. We do not have the credit spread report for Canada. That is not something that we currently do, Raheem. Would it be good if you compared and contrast different brokerage firms that operate in Canada? So from my perspective, I prefer to be more agnostic, right? Because from my perspective, I really want to provide for you, no matter what brokerage firm you trade with, we want to support you with your options trading. So we don't tell you which brokerage firm to trade. We try to remain neutral on this front. We can only tell you what are factual things, like, this brokerage firm trades multi-leg options. These brokerage firms do not. These are the commission instructions for these brokerage firms. These are the commission instructions for other brokerage firms. It's up to you to make that decision. But I can tell you personally, from an options trading perspective, I personally would trade only at a brokerage firm that offers multi-leg trading. That's my personal preference. That's because of my experience with options trading. It's the type of strategies that I prefer to trade. So for me, that actually means that there's only a few brokerage firms in Canada that provide that type of trading. And then you have to account for cost as well, right? What is the transaction cost? And from there you can kind of make the decision as to which brokerage firm makes the most sense for you. Alan saying, thank you so much for your adamant dedication to teaching us and your passionate craft. Thank you so much, Alan. Have a great holiday and all the best. Thank you so much, you as well, Alan. Jonathan saying, is there more to the extrinsic value of an option other than implied volatility and time decay? Generally speaking, there's implied volatility, there's a stock price, there's time decay, and there's also a little bit of interest rate, but being interest rates are zero right now, that's not really a big factor. But to say it's just implied volatility and time decay, I think is doing a little bit of a disservice, because you also have to factor into the stock price and the strike price. Barry, thank you so much. I hope you have a happy holidays as well. Someone just posted a link to compare brokerage firms in Canada, so I'm happy to forward this link. I've never seen this link, so please take that at face value. I'm not promoting this link or anything. Someone just said that there's a way to compare brokerage firms in Canada. Kind of a silly question, but how do you get paid by TMX? Yeah, so TMX has a contract with Options Play. They have a contract with us for the technology. They have a contract with us for the education. They provide they pay us the cost so that we can provide this education to all Canadian investors free of charge. Shannon is saying, is it picking up pennies in front of a steamroller to sell December monthly puts once you are under 2 weeks to expiration? So Shannon asked a great question. And there's a term that we have here in the options market that we call picking up pennies in front of a steamroller. And what that means is when you're selling very short dated options that expire very soon. So December monthly options would be, I would say, starting to be in that category. You still have about a little over a week left before the monthlies. So, we usually talk about when you're selling 1 day options, 2 day options, 1 week options, in that realm, we call that kind of picking up pennies in front of a steamroller. And usually it's for investors that are selling relatively far out of the money options, because they're selling them because they have very high probability of success. And 95% of the time, it'll work out. And it's just that 1 month, like for example, and the thing about this type of strategy is that it's completely dependent on when you start the strategy. If you started the strategy back in April, you would have done really well on that strategy. You probably would have made money 99 out of the 99% of the time that you sold these 1 week options that are out of the money. But if you started the strategy in, let's say, January of 2020, you would have lost your shirt, because February and March would have completely destroyed your portfolio. Now, how does it determine when you start? That's just sheer luck as to when you've started this particular strategy. So Shannon, yes, selling short dated options, right before expiration that are under 2 weeks is what we call picking up pennies in from a steamroller, because you have no idea when weeks, months like February are going to come out, right? We had no idea the coronavirus was going to come out. So if you had happened to start the strategy back in January, you would have been a very, very, very unhappy options trader. If you were the type of trader who happened to start in April, then you would have been a very happy options trader. Now, so that's just sheer luck. And I generally don't like strategies that are purely based on sheer luck as far as when you started. So I hope that provided some insight into that particular strategy. Raymond saying, great 2020 overall review. I can appreciate your passion to help others by applying your teaching abilities, clear and easy to understand. We can easily learn. Thank you for your teaching. Raymond, thank you so much. Raymond, you've been a viewer of our education for years now. I recognize your name. Thank you so much for your support, and thank you so much for continuing to come to these options education seminars. I'm clearly, it probably means that you are learning something. So Raymond, thank you so much, and I hope you have a great holiday. Thank you for your most meaningful presentations. Thank you so much, Joachim. Thank you so much. I really appreciate it. So again, for all of you that wished me a happy holidays, thank you so much. I really appreciate that. Please take the time to review some of these things that we taught here in 2020. Again, I don't expect everyone to have made every single one of them. So I hope that this was a good review so that you understand what we covered and understand how you can go back and actually watch some of these. Let's see. Can I price the option by averaging the bid and the ask price? Yeah, so in options play, for any option, you can click on modify, and you can click on bid ask. And what we're doing is we're basically averaging the bid ask and showing you the mid price here. So you can actually choose between bid at price or bid ask on options play. What is the deal about synthetics? So Mark, I'm not sure what your question is, but synthetics just means that where you're replicating one strategy with other strategies. So for example, you can replicate a long call by shorting the stock and buying a put. So those are ways that you can potentially replicate a call option with a short stock and a put position. Now, there's no real reason for you to go about doing that, right? Because buying a call option is going to be far more cost effective and less transaction cost to buy a single call versus shorting the stock and buying a put, which is going to cost you margin, which is going to cost you more in transaction costs. But that's what we mean in terms of synthetics, right? You can also short a put and buy a call. That's a synthetic for a long stock. But synthetics, generally speaking, means that you're adding transaction costs and you generally have a higher margin requirement to trade those synthetics. So I would say that synthetics is really not something for retail investors. It's more so for institutional investors that need an alternative way to trade something that perhaps they can't trade. So they're synthetically creating something that they can't trade the underlying itself. Laurent is saying, I tend to find that options tend to be more expensive from 9:30 to 10:30 a.m. So Laurent, I haven't seen that. I'm not sure what you mean by that. If you have some research to back that up, I'm happy to look at that. But largely, if you ask any market participant that's been trading options long enough, in the age of electronic market making, with the exception of like the opening few seconds, you can basically trade options from 9:30 all the way through 4 p.m. There really isn't a time of day that's better or worse for trading options, in my opinion. I'm working hard to work on trading plan adapted specifically to options. I already have something pretty good for equity. So Mark, great. I mean, I hope that this was helpful, or the course that we have here will be helpful for you to help you build that trading plan for options. Can I access to the US options for options play using BMO Investor Line? So currently we don't have an integration with BMO. We have the integration with National Bank. That's our first integration in Canada. We are working with other Canadian brokers right now, but National Bank is the first one that's live and up and running. Would like to know more how an option market maker thinks and works. So Mark, that's why we've started doing the market outlook sessions. Steve Sosnick, the chief strategist of Interactive Brokers, he was a market maker for 20 plus years for Timber Hill, Interactive Brokers, one of the largest brokers from the world. We have had him on to provide that market maker perspective so that you can get a better sense. But from the one thing that we want to teach you is that market makers they're not market makers anymore. They're just computer algorithms, and they're computer algorithms that want to provide liquidity. They're not, when you think about, market makers playing cat and mouse games, that's with each other. That's in high frequency trading. That's not with you as a retail trader. As a retail trader, first of all, they know what's retail flow, right? You're not high frequency. They can easily tell. They're not trying to pick you off. They're certainly not trying to screw you over. They're just trying to provide liquidity, and they just have an algorithm that determines whether or not they can make enough money on an order or not. If they can make enough money, they'll execute the trade. If they can't make enough money, they won't execute the trade. It's as simple as that, generally speaking, for the retail market. But if you want to learn more, please come to our Market Outlook session. Steve Sosnick has been a fantastic person to ask some of these questions regarding market makers. How do you update stock in the options play watch list? So you can click on the watch list tool. You have to first create a new watch list, right? So if you have a watch list, when you're adding a symbol to the stock, to this, if you want to update the stock, click on Menu, Edit Watch List, and you can either delete, move it around, or just add more by adding more symbols to it. But you can go to the menu and click on Edit Watch List. Ken, thank you so much. I really appreciate it. Serge, thank you so much. I really appreciate. Ken, thank you so much, everyone, for the wishes. Laurent is saying, I used options play to write a cover call on BMO. The day I wrote the cover call, I recommend to sell the January 8th. Yet the next day I recommend to sell the February calls. Laurent, that doesn't sound quite right, but you could have changed your income settings here. So at the bottom, you have your income settings. You can actually choose short dated, medium, or long term. So if you got January 8th one day, and then you got February the next day, that sounds like you may have changed your setting from short dated options to medium dated options. You can always change it back to short dated options. So as you can see here on short dated options right now, it's telling me to do the January 15th. So I think it sounds like you may have just changed your settings. Okay. Laurent, then you can send us a question here, or questions ask us. We're happy to take a look at it. But if your settings are in, because BMO will still tell you January 15th right now. Actually, I'm on BMO right now, and it's telling me January 15th. So you check your settings, see if it's still short dated options. If it's still short dated options, you should see January 15th, like I see here on my screen. So with that, I want to thank everyone for taking the time out here this afternoon. I hope that this was helpful in giving you a better understanding, again, of what we've covered here in 2020. Like I said, a lot of things. I don't expect everyone to absorb everything at the same time. So that's why we're doing this review, showing you all the things that we covered, why you should pay attention to certain things, and point you in the right direction so that you can review it at your own pace before we start 2021. So with that, again, thank you so much. I hope everyone has a safe and happy holiday. And I'll see you guys here in next year. So happy New Year, and see you guys in 2021.